I'd like to thank trocaire for the kind invitation to come and talk to you. I was fortunate enough to be invited last June to really, I think it was one of my highlights of 2015, one of my favourite days, not just because of the weather. It was the content was fabulous. I'm addressing you today in my capacity as director of the ISI Centre, of which more later. I'm passionate about the delivery of a low-carbon economy. And I see the divestment as a critical component in that. And what I want to do today, as Clean invited me to, is to try and give you some insight into what the financial community in Ireland is thinking, and how they actually view divestment. So I thought a good start would be to see what's changed since I was last in Maynooth, and in the last since June last year, we've seen the price of oil fall by 50%. That's a huge fall. Gas is becoming cheaper, and anecdotally, internationally, you can't give coal away. So, and that's represented with the graph on the left. Now, there are many market-related reasons why that fall has happened, and probably outside the remit of this, although if you want to stay here till about 9 o'clock, I'm happy to talk to you about it. But I think the fall in oil and the fall in profitability of the oil market majors, which has led to this underperformance. If you look at the other graph there, what I've done, I've plotted the top 5 oil and gas equities versus a market average Eurostoxx. It's a well-known benchmark. It actually reveals the fact that fossil fuel as a financial investment is becoming a pretty tricky proposition. In the FT, I think yesterday, they were referencing the fact that the top 5 oil and gas companies are preparing to pay out $46 billion in dividends. This is from companies where profits are falling, access to capital is becoming problematic, and demand for the product is falling. Yet they're paying out huge billions. And as somebody, albeit a long time ago, who studied economics, it's anathema. It doesn't work. You can get one of the first-year economic guys in, and they'll tell you these sums don't add up. So why is oil and gas shares, why are they so attractive to the financial community? And I suppose if you delve a little deeper and talk to the people that I talk to, one of the key things I wanted to illustrate it here is financial professionals don't really understand divestment, because for them, if you look at the graphic here, you have an ethical investor who divests of fossil fuels and invests in something far more ethical and maybe a renewable investment. What happens to those shares? The stockbroker buys them and sells them on, because there's a buyer and seller to the transaction. Because you have people who are willing still to invest in fossil fuel, the equity base is pretty much maintained, albeit maybe at a lower price. And from that equity, companies are able to borrow against that and perpetuate fossil fuel exploration and production. So I think in some respects, the financial community is missing a bit of a trick. I think they're quite perplexed, notwithstanding the fantastic work that Mark was telling us about. I mean, I think it's very apparent, but I think that not enough people are appraised of that research. So, thinking about the institutional side of things, the investment managers, spare a thought for them, because the way that the industry is structured is that investment managers have to meet or are measured against benchmark performance, like a league table. So the people that are deploying capital put their money in, and they can measure how well investment managers are doing relative to a benchmark. And the typical, the most prevalent benchmark, the one that nearly everybody uses, is the MSCI World Index, which carries around 6.5% energy weighting. And I suppose the problem for people that look at the arguments about unburnable carbon and unilaterally divest end up underperforming this index. And because they underperform the index, the likelihood is that they're going to lose the right and the fees attached to managing that money. So consequently, what we have is an industry who pretty much move as a herd. And what we need to do is find a way of turning the herd, if you like, to use a farming analogy. So we need to break from the herd. How do we do that? How do we establish more independent, a greater range of benchmarks that capture the upturn across different sectors? I don't actually know the answer to that. That's something that maybe we can discuss later. I think the consumers and investors, they will have distinct requirements. And I think that one of the aspects is that maybe as consumers or investors, we are not being articulate enough about what we actually want and not demanding enough of our the guys, the trustees that look after our money. I think also investment consultants here, I'm thinking of the Mercers and the Taz Watsons, etc., need to really get creative, get on message, and understand the diversity and breadth of indices that are out there. And it's really incumbent on them to start looking at ways that you can compare apples with oranges in terms of different benchmarks. I think regulators as well need to adopt regulatory treatment weightings for capital allocations to fossil fuels. Very interested in what Mark was talking about the reserve-based lending. I think that's low-hanging fruit from the regulator perspective. But I think globally we're seeing a paradigm shift. I think that in the investment landscape, financial considerations are not the only element anymore. With the growth in impact investment, crowdfunding, ethical investment, we're seeing an increase in moral considerations, and also climate change risk is not going to be ignored, and people are looking at environmental aspects as well. So I think that now is the optimum time to incorporate the divestment conversations in this new approach. So as I say, it's of its moment. To that end, the ISI Centre announced last week at the Irish Embassy in London that we're establishing a responsible and sustainable investment forum. The network that we have, both nationally and internationally, lends itself to developing Ireland as a leading domicile for ethical investment. And I'll be pushing to make sure that divestment is front and centre of the work that we hope to do. And I'll leave it there and we can discuss.
Thanks very much, Paul. I think in doing a bit of reading around in the last while about some of these issues, again, by no means being an expert in this area at all, but you really get the sense that there is a lot happening in the area of green finance and innovative green financing options and things like that. But listening to yourself and others, there's a real sense that mainstream institutions are taking a kind of hedging your bets approach. So they're putting a little bit of money into these green, innovative options, but maintaining the majority of their investment as business as usual. So it's how do we convince a few leaders, a few brave leaders, to convince them of the rationale as set out by Mark, but also to have the courage to put their heads above the parapet and step out ahead of the herd in order to lead the rest. How might that happen in the Irish context, and what kind of arguments do we need to bring? Is it the moral? Is it the financial? Is it both?
Hedging your bets is actually a valid trading strategy, but anyway, one that I've used many times. We were talking last night. We had a very, very stimulating evening, and thanks to Mark, I didn't get to sleep till about 2:30, not because I was out carousing, but because I was buzzing for the evening, and some of the going through the conversations that we had, and I think the thing that's resonant to me is around the fact that maybe divestment is not the right label. And apologies for people's sensitivities, but I genuinely believe that the sense of divestment is giving up something. And I think that what we're actually doing from a financial perspective, when we are selling our interest or getting rid of our interests in fossil fuels and switching them to green, sustainable investments, is we're actually enhancing our returns. So I think that maybe the conversation that we need to be having with our policymakers and with the people in the Irish financial community is talking about reducing risk of loss, increasing returns, and I think that might well resonate more with the public if they have a sense of loss, or potential loss. I think maybe we need to recalibrate the message around divestment. It's still divestment, but just by a different name.
Thanks. I think it's a very valid point, and it's something that any of us engaged in advocacy and campaigning and marketing, for that matter, will be appreciative of. The need to tailor your concepts and your messaging appropriately for whoever you're talking to, but there's definitely some food for thought there. I'd like to go back for I think the point you made about the Responsible and Sustainable Investment Forum that's been launched is really pertinent and interesting. The idea of the mandate for such a forum and raising Ireland's profile in terms of offering the management and servicing of sustainable investment, that being a niche here, that divestment of fossil fuels by members of that forum or members of the ISI that you're director of would send a very clear message in terms of Ireland indeed being a future-focused, cutting-edge green financial sector. I'd like to go back for a minute to the question of the role of the state in all this. Some of us will be aware that the Paris Agreement actually contains a provision that states, as part of their climate action, have to make finance flows consistent with low greenhouse gas emissions and climate resilient development. So there's actually an obligation on states to now look specifically at finance flows and how they're directed. So in our thinking internally about what strategies or what targets to use in divestment campaigning, we've looked at the Irish Strategic Investment Fund, the ISIF, which is formerly the National Pension Reserve Fund, and that's an investment vehicle for the Irish government that's funded by taxpayers here. To call on the government to instruct the ISIF to divest from fossil fuels and to invest instead in a just climate future such as community-led renewable energy or household retrofit energy efficiency, etc. Some of us here will be aware of the research conducted by Joe Curtin and Paul Dean from University College Cork last year, looking at the ISIF and its investments. And they found that in 2014, Irish taxpayers had about €72 million invested in the fossil fuel industry, and that included some of those extremely dangerous but also highly unprofitable, potentially, as Mark was saying, like the Canadian tar sands. And the 72 million of the 7.4 billion in the ISIF is a small enough pot, and the plan of the ISIF, as per the new legislation, is that it be redirected anyway from global to more domestic investments to seek a better return for the Irish economy. But those investments are still there. There's no policy, there's no commitment to divest from fossil fuels or to prohibit new investment in fossil fuels in this country or another. So if we were able to achieve agreement by government to instruct the ISIF to divest, that could be a very powerful symbol in terms of the need for coherent decarbonisation policy in this country. And there's a precedent for that kind of action, the Cluster Munitions and Anti-Personnel Mines Act of 2008, which prohibits the ISIF from investing in that industry. So just thinking about that sense of the need for leadership to convince the others to move out from the herd and start turning the tide. If the ISIF was to divest and to have the policy not to invest, have new investments in the fossil fuel industry, what's your sense of what that might do within the Irish financial sector? Or should we be looking at convincing some of the non-state-owned commercial operators to be stepping ahead and perhaps helping us push the government and the ISIF?
I think the answer is both. I think the companies like BlackRock that are domiciled here are already moving along that path. I think it would be good for ISIF to invest sustainably right the way through the portfolio, although what I would say is 72 million in the big scheme of things, when you're talking about 7.4 billion, is actually quite small. And divestment and policy changes and shifts do take time, so I'm not party to whether or not that's underway already. The other point that has to be made is that if you're going to divest at scale, you need to have projects and initiatives at scale on the investor side. So maybe what the focus should actually be is for ISIF to continue its mandate and look at trying to develop and generate, like we talk about community-based projects, there possibly is a role for our credit unions to act as local conduits for local-based investment in community energy efficiency and energy generation projects. I also think that the elephant in the room is the fact that as a country we import, or we have something like 85% of our energy requirements are made out of fossil fuels. So each business man, woman, we're fossil fuel junkies in this country, and that sea change has to happen from a usage point of view. I think there's a whole operation transformation for energy provision that needs to be implemented, because you have to walk the walk and talk the talk. And at the one hand, it's all very well and good to divest of fossil fuels, but when you're whacking diesel into your D16 Range Rover, the two things don't really add up. So I think we need to be brutally honest and have a collective look in the mirror, not just really from a financial perspective or business perspective, but from the point of view of individual citizens, let's not push responsibility for this elsewhere. Stand up, take responsibility.
Thanks for that, Paul. And I think that's an important point. And I think that's how we would like to see divestment used as well. So divestment is a conversation starter about how far we are from where action actually needs to be, but also to both put it to people, but also empower them to be able to say, yes, it seems a huge insurmountable problem, but actually there is something we can do. And if we do it collectively, we can actually have the systemic change that Monsignor Connolly was referring to this morning. And the idea, so even beyond fossil fuels, that idea of becoming a more conscious and responsible financial citizen, so to encourage that kind of culture. So I think the important thing you mentioned earlier there was about the need for us to become more demanding about what options are there for us. And I think for any of us who have tried or have started that divestment journey, you'll be aware of the challenge. It takes courage to start asking questions about a sector that you're not confident in. It's not your area of expertise. And in general, the initial response is that it's not possible, it's too complicated, and even if you could do it, it's not going to be viable, and you're running a high risk. We have to have the courage to come back again and again and to press for more options, for more answers. And that goes back to it's not just the divestment, but the reinvestment. We want to see what the options are for us to invest in that will have a social impact, as well as taking us away from the future that we're trying to avoid. And that's a good bridge to the last discussion then with Ian. Because this question of being able to pursue divestment, it's a challenge because it seems that the options are not readily available in the mainstream banks and investment companies, and this is a major potential barrier to our ability to divest, and therefore a potential barrier to the whole idea of divestment campaigning. So actually part of divestment campaigning is the direct engagement with our financial institutions, so that with our engagement we create sufficient demand so that they're forced to consider and provide new options, so that our divestment journeys also become part of our influencing strategy. And that's why when we're thinking about in trocaire what our strategies and targets might be, we're thinking about what's the policy change, what are the political targets, but also how we might engage directly with banks in Northern Ireland and Ireland to divest themselves of fossil fuels, but also to provide its customers with options for ethical and fossil-free banking and investment options.